TJ the Wheel Joe coming at you live. It is Friday, yay. Friday, February the 27th, 9:51 a.m. Central Time, Texas time. Guys, I sold 5,000 puts on SoFi and I think I crashed the stock. I think I crashed the stock. We'll talk about what's going on with that. I've got two screenshots that show the entire portfolio. So I am going to talk about the portfolio and how I feel like we're still on the path to 20 million. But let's talk about what has the market taught me over the last couple of months. For those of y'all that might be new, my name is TJ the Will Deal. I sell puts, I sell calls for a living. I roll and makes dollars and cents, and I've been known to buy the timely leaps. That's what's going on. First things first, though, is 1 minute with God. Let's knock that out, and I'll record it as we go so I can post it on X. And it's on confession. On confession. So I did a confession on X this morning. I didn't know that that's what this was going to be on today. My confession is most of the times that I go live on YouTube, it's because I didn't have anybody to go golf with. I'd rather be golfing. And gosh, I got to shave my head. This is crazy. It's crazy. Well, I was probably going to want to go to dinner tonight, so I'm going to have to get all purdied up. You know what I mean? Anyway, let's knock it out. February 27th, confession. What happens when I confess my sin? Confession is the act of recognizing your sins before God so he can forgive you, and it indicates your desire to change your ways. Sin separates you from a holy God, and confession brings you back into a relationship with him. When you confess your sin, you agree that something wrong needs to be made right and that a damaged relationship with God needs to be restored. God's response: I confessed all my sins to you and stopped trying to hide them. I said to myself, I will confess my rebellion to the Lord, and you forgave me. All my guilt is gone. Psalms 32:5. So now there is no condemnation for those who belong to Christ Jesus. Romans 8:1. Restore to me again the joy of your salvation and make me willing to obey you. Psalms 51:12. God's promise. This is my blood, which seals the covenant between God and his people. It is poured on to forgive the sins. It is poured out to forgive the sins of many. Matthew 26:28. I think that's a real tough one for people. I know it's a tough one for me too, the whole confession thing, because we feel like we don't have to pay for it right now. But, according to the Bible, everything that you've done wrong, like you're going to be held accountable for it. And that doesn't mean you're going to go to hell, if you've received salvation, but that also doesn't mean that there isn't hell to pay, if that makes sense. So, anyway, that's a deep discussion. I feel like I'm not real qualified to talk about all the judgments in the, that are talked about in the Bible. We'll leave that to the pastors of the world. But, it's interesting stuff, man. At the end of the day, we strive we're supposed to strive to get closer to God, and sin pulls us away. But I think that a lot of the sins that we commit, like, they're like the acts of commission, they're like secrets between us and God. At least we think they're secrets, but he knows what's going on. So you can't fool him. You can fool yourself, you can fool others, but you can't fool him. Like, God knows. So anyway, that's the message of the day. Peace out. So let me post this real quick before I forget, and we will get on with the regularly scheduled program. 1 minute with God, my daily devotional. Only skipped a couple of days of this because I forgot, and the other time we were out of town. But I just did screenshots. But then I went back and read it all. So it's all there. It's all there if you're following the series. It is all there. Anyway, where are we at here? Let's see some of the. Ooh, we got a bigger audience here. What's going on now? Is Amit no longer on or what? I saw some of Amit's program this morning. Man, I just want to reach through the screen and give my boy a hug. I want to give him a hug. Let him know, Amit, it's going to be okay. Been in this game since 1997. Lived through the .com, lived through the Enrons, the MCI WorldCom debacles, lived through the great financial crisis. It's going to be okay. COVID, that's around the time that I feel like you got in. That's when I went full time. It's going to be okay. This too shall pass. Clip this, send it to Amit. Amit, it's a virtual hug for you. It's going to be okay. Somebody needs to tell you stocks don't just go up. They don't just go up. They don't just Palantir. They don't just hood. They don't, that's just not normal. It takes 6 to 7 years typically for a double in your portfolio. So don't get spoiled by the things that have happened here recently. That is not the norm. It is not the norm. Be grateful that you got in. I'm very, very thankful and grateful that I got in when the market had just gotten its ass kicked because of COVID, and we were beneficiaries of that. But I think everybody's starting to find out that investing's kind of tough. Investing's kind of tough. So anyway, let's get into it. What's going on, Mike D? You'll be down a little soon as you enter, but that's written in stones. Let's print. Thanks for your positivity. Tough red days. Golf. I am going to golf today, guys. I'm going to golf today around 2:30, 3 o'clock in the afternoon, 3:30. I am going to golf 9 holes today. And then I'm going to get all prettied up and I'm going to take my wife to dinner. She doesn't know yet. I'm going to initiate date night. She usually initiates date night, but I'm just never going to lose perspective of ultimately what's important. I made a vow when my daughter committed suicide that I was going to keep God, family, friends, relationships, and then business in that order. And it is non-negotiable. At the end of the day, all the money, all the gold, all the riches belongs to God. So whatever he gives us, it's just for us to borrow. We're supposed to be good stewards of it, but nothing belongs to me. Nothing belongs to me. They always ask me, what's my net worth? Whatever's in my pocket. Because if I die now, that's what I'm taking with me is what's in here, right? That's it. And God's in here. Jesus is in here. So that's my net worth. The rest of the stuff, it's whatever the paper says, man. If SoFi is up for the day, the net worth's a lot higher than when it's down, right? If you want to put like an actual number to it. I'm down. Where do you golf? Right here in the backyard. We live on a golf course. Mr. G, what's going on? Just so some more puts, CSPs on CRM. Oh, 1 second here. Just got a message from Sergio. What's Sergio got to say? Yeah, of course. Of course. Hold on. Let me send him the link. I'll put the link in the chat for you. So I'm going to put the link in the chat for Sergio. It looks like Sergio's going to hop on here. That's awesome. He's always an amazing guest. Absolute wealth of knowledge. Love me some Sergio. You guys aren't following Sergio, I highly recommend it. Really, really good channel. Small channel like mine, but a wealth of knowledge. This gentleman has been trading this market for a long time, and he's the first one to tell you that stocks don't just go up. Sometimes this game is kind of hard. So you want to control your temperament, your positioning, your sizing. I play bigger than I should because I also know the money that's on the sidelines, right? So that's the element that I have access to that you guys don't have access to, if that makes sense. So keep that in mind. Hopefully he'll join here soon and we'll get on with the regular scheduled program. Hi, good day. You said your wife is wealthier than you. Do you also manage portfolio too? Or no, we do all kinds of stuff together. PayPal, SoFi. What is that? Oh, I can read it over here on this side. It's easier. PayPal 4. I guess that's Shift 4. SoFi, MSTR, BM&R, all on sale. Do I sell Netflix and move into fintech? Man, we're going to talk about what the market's taught me. I'll answer that question here in just a second. Naked calls printing today. They may, I haven't really looked at the portfolio that closely, to be honest with you guys. So I don't know. We'll find out here in a second. Without further ado, though, Sergio, a man that understands this very basic concept to be true. Stocks don't just go up and to the right, do they, Sergio?
How are you, TJ?
I'm well, man. I'm well. 1 second. My wife always knows. Hold on. One second, Sergio. I have to go unlock the door because we have
No
a
worries.
gentleman that's going to do
No
some
worries.
work in our shower.
I'll keep the crowd tame. How's it going, everyone? Tough markets, huh? Yeah. I don't know how many of you have been trading or how long, for how long. The question is how many of you will survive? It's not how many of you will make money in this type of market. So my goal is to inform and educate properly because I think it's lacking, especially on social media, especially these fools on X. They are fools. They are going to blow all their accounts. I can assure you that. I'm not trying to be negative. From someone that has seen the other side of the coin many times, I am here just to, it's not advice, it's just brotherly love. Because I don't know any better than anybody else what the market's going to do from day to day. If there is any person out there that says so, they're full of shit. Run the other direction. But I wanted to join TJ's, not to talk about my positions and what I'm doing and this and that. I actively trade and I actively invest. So you have to separate fun from wealth creation. Wealth creation is not done by selling puts, selling calls. Wealth creation is done by buying great companies, potentially at a discount, and holding on. So TJ, I'm not here to give advice. I'm just here to warn people or do or this or that. My goal is to inform and educate properly, and my goal is to make sure that people understand that there is the other side of the coin. And when I've seen the other side of the coin multiple times, and I do believe that a lot of the people who are trading today are new meaning they started during the pandemic, and they only think stonks only go up, right? Stonks only don't go up, folks. And when they do go down, and take this from me, and I took it from my mentors 30 years ago, stocks walk up the stairs and take the express elevator down.
Big time.
I don't have to give you too many examples of that, but then you all are dealing with it. One thing though that I want you to guys understand, what you have done over the last 3-4 years, selling puts, cash secure puts, this and that is not going to work. Not in this type of market. Not when you get in the money after you sell a cash secure put within 3 hours, and then now you're deep in the money. And there are many examples of that because, by the way, TJ, do these people on X know that there is outside 15 stocks that they hammer about? There is 8,000 stocks people can trade.
There's like 10,000 actually.
Fantastic. No, I'm talking like major cap stocks. I'm not talking, small cap, micro cap. I'm talking massive stocks, right? Okay.
Yeah, what's
So I'm
wrong?
going to just a little bit talk about that because I got to run. I got to do a couple things. But here's the deal. When what you have done for 3-4 years and you accumulated some sort of wealth or you've done well could be taken away from you within months. It'll take you 3 years to do it, and it'll be gone in months. So you need to start changing and adapting what you have. If what you have done for 3-4 years because stocks only were going from lower left to the upper right,
Right.
it's not going to work.
Right.
So what you need to do now, look at yourself as a carpenter. You're a savvy carpenter. You have to have all the tools in your toolbox. Even if it's a tool that you're going to use just once a year, you must have that tool because you can't put a square peg in a round hole. It's just not going to work, right?
Fit. Yeah, it doesn't fit.
So once you have all the tools, then you can adapt and adjust because, look, people make money when the markets go down as well. However, if you look at the indexes, you wouldn't be able to tell a lick about Hood being down 50%. Because these are the stocks, by the way, TJ, Hood, BMNR, Palantir, SoFi, PayPal. I'm going like, bro, these are all in their own world of hurt of downtrends. They're in bear markets. Let's move those aside. My suggestion to folks is this. Yesterday, on a super bloody red day, there were 155 stocks that made a 52-week high. What were they? What groups were they? There's a thing called rotation, folks, and this is not the Robin Hood YOLOers buying those stocks. This is massive institutional money rotating, constantly rotating. How do you figure this rotation out? It's really not that difficult. Create some scanners for yourself. Create some 52-week high lists for yourself. If you're willing to still stick to selling cash secure puts, at least sell puts on things that are actually going sideways to higher as opposed to a falling knife. You can't expect to catch a falling knife by the handle too many times. If you do that, you're going to get slashed. And all the people who are selling the puts on Hood and SoFi and this and that, well, I'm not even going to talk about HIMS or EOSC yesterday, right? My goal is to make you guys understand that you don't have to short markets because shorting markets is really, really a difficult thing to do. And it's counterintuitive anyway for most folks. But what I'm saying is that do what you do on stocks that are going sideways to higher, because in the worst bear markets, there are groups of stocks that are always going to go higher. The most boring stocks, what has worked over the last 3 months? Here are some names for you guys.
Walmart.
Southwest Airlines, Walmart,
Probably Costco.
J&J, right?
Yeah.
Coca-Cola. You can make money with those. You can sell puts with those. It doesn't. If you're going to just stick to what just one trick pony that you are, fine. But at least
I think the one thing though that I would interject is it's about your time horizon. Like I have a 3 to 5 year time horizon, and like I have my 401k that I've been investing in for years. I have a SEP IRA new one that I just opened. And I don't grade myself on a monthly or annual basis. I'm looking at 3, 5, 10 years down the road because I'm like, how long am I going to be in this game? So if I believe in this company, I believe that I can manufacture the win. I'm going to sell puts and calls around it. But I'm also okay owning shares. And I understand that you could be down a lot on shares. I'm going to give you all an example. I don't talk about this one a lot because I'm not proud of the trade because I could have made more money with it. But I bought the Facebook IPO. I had oil filled money. I had like $10,000 and I bought the Facebook IPO. I believe it was FB. I believe that was the ticker for Facebook. Correct me if I'm wrong, guys. But that stock went down immediately, dude. Like I bought the IPO like literally day one. Called the broker up because Robinhood wasn't around at the time. This was, whenever Facebook was going public.
Yeah.
And they placed the trade for me. And I was down on that trade for like 4 or 5 years, I want to say, Sergio.
You went public at 40 and then it went down to 20.
Before,
but TJ, but what you're
before I was
saying,
whole.
look, I fully understand what you're saying.
Yeah.
Okay. That's why I think you were talking to your wife. I said, you have to figure out who you are. Number one, are you an investor? Are you a trader? Those are two very, very different things.
Agreed.
However, if you're a trader, in my career, I've seen so many people start as a trader and become long-term investors because they did not take the L.
Yeah.
You have to learn how to take the L.
Well, I've
If
taken
you
a few
cannot
here
take the L, I mean, a lot, a perfect example would be Palantir, right? Or SoFi. They came public. Where did they go? They went down for 4 years. The thing that people don't understand is that
they went up. Initially, they went up, right? Like
initially they went up, and then bleeding started. But what I'm trying to say is that this is another thing that people don't understand is that one, there is much more than 15 stocks on the planet. Okay.
Agreed. 100%.
Two, trend is your friend. Do not ever argue with that. Don't argue with the price of the stock that you're looking at, because that is the price. You may have an opinion about that stock being expensive or cheap, but your opinion doesn't matter to the markets. Market's not going to respect your opinion. And the last thing is opportunity cost. While you're dicking around and waiting for 3, 4, 5 years for something potentially to work, which you are not even sure if it's going to work or not.
Right.
Because, Facebook worked, SoFi worked. But in those 5 years, you missed NVIDIA. You missed all these wonderful, wonderful companies who came around and changed the world. My thing is, don't be just a one-trick pony. There is so many different things that are going on. If you look at my watch list today, 70% are green. Why? Because they're all base metal stocks. They're all precious metal stocks. They're all consumer cyclicals, airlines. That's because those are the things that are working. And that's trading, by the way. Would I buy and hold a Southwest Airlines here for the next 5 years? No. But in my trading account, in fact, I put that out on Wednesday. I have 5 stocks, and I've been coming on your show for a long time. And I put those out there. You could have bought Netflix, which I bought. I got assigned Netflix actually last Friday. I got lucky with it. I have Kava. I have Google. You create an investment portfolio for long-term investing, and please separate it. Have 2 separate accounts.
Yeah.
Because your accountant is going to love you if you do that, number one.
It's easier for him for sure. He hates me.
Number two, number two, what's going to happen is that if you're investing, you want to take advantage of your gains in a long-term capital gains tax basis, which is at 19% versus short-term trading, which is all these options are, versus your ordinary income tax rates. Mine is 40% in California. I don't want to, right? So separate the fluff and entertain yourself, have fun, trade. I'm not against trading whatsoever, but my thing is, last but not least, all these stocks that all these fools on X are talking about, okay, are already down 50%. Yeah, with the market only 2% from all-time high. Now let me tell you this, folks, if the market takes a 20% dump here, the index, those stocks are going to get halved again and halved again, because there is not a goddamn chance on the planet that a hood is going to go up against that general market trend, which is going to be down 20%. So please understand all these risks. There is risk in everything. There is no free meal on Wall Street. Having been there for a long time, I understand the risk. And I'm just begging people who are trading, stop going to X. Stop following bunch of idiots, because they do not understand risk. They don't talk about risk. And then they put up their losses, and then they put up their gains. I'm like, bro, who gives a shit about what you did on EOSC when the stock went down 45% yesterday? They go like, well, I lost.
I don't follow that one, but Christian was posting that he was down 170,000 on that particular stock. That's the battery company, right, or no?
I have no idea what it. Yeah, well, it's a semi AI power generation kind of a stock, like the IREN and NBIS and CIFR, right?
Gotcha.
And the another thing is, when about 3 months ago, Wall Street decided everything is overvalued, every high PE growth stock, we're going to take it out in the back and shoot it. I can give you many examples of that, and Hood being the number one example. At 155, Hood, with earnings of $2.06 this year, was selling at 75 PE. And people, people go, PE is not that important. No, PE is super important. Why is it important? Hood is growing 12% a year, still growing. 75 PE, 7 times its actual growth rate is too high. What did market decide? And a lot of people said, oh, Bitcoin went down, that's why Hood is going down. Bullshit. Has nothing to do with it. It's all about PE compression. When PE compression comes to these high flyers, watch out. You're going to get nailed. Is Hood cheap now at 75? No, still not cheap. No. However, it's cheaper than 155.
Yeah, but I mean, if you're selling a house for $3 million that should have been selling for 1.5, and then you bring it down to like 1.9, it's cheaper than $3 million, but it's still not where it should have been from the very beginning.
So all I'm saying, TJ, is you do a decent job at it. I'm just saying that in everything you do, you must understand that there is risk. Yeah. And what you did successfully, because the markets helped you, may not work going forward. And with the market only down 2% from all-time highs, and by the way, this sideways thing for the last 2 months is going to resolve itself one way or the other.
Yeah, it's like a wedge.
It's just sideways. So all we're doing now is gathering energy to go explode higher or absolutely fall apart. Be careful, folks. And I'm not saying go short, go do this, go do that. If you have the tools, by all means, go hedge, go sell futures and short futures and maybe some index puts or put debit spreads or whatever you want to do. But what I'm saying is that understand there is risk, understand what you did the last 3-4 years may not work, and you're going to get nailed. When you sell a cash secure put and you sold it for $3, and the next day stock drops 10% and your put is 10, rolling out and then down is not going to help you, because that's going to go down another 10%. For example, if you sold puts on Hood, 155 at 100, you sold puts. Great. Okay. That's down 30% from the high. It's bargain, right? Okay. Well, you just sold the puts for cash secure puts for a couple of bucks, maybe a month out. All right. Now what? Stock is 70. Now what? And you're going to say, well, that's when, TJ, people turn from traders to investors, because the market forces their hand. Now I'm going to buy and hold. While you're buying and hold on nursing, that's the other thing on X that people do that irritates the shit out of me, is this. They post their gains. Oh, look, my cover calls printed today. For your cover calls to print, your underlying is dead. You're accumulating massive amounts of unrealized losses. Understand that. Right. And so now you're stuck in Hood at 100. You got assigned at 95. Great. Right. Now you're down another 30%. Okay. First, understand that for you to break even, Hood doesn't have to go up. If something goes down 50%, it goes up, back up 50%. You're nowhere near breaking even. It has to go up 100% for you to break even. So understand the simple math part of it. But now you're missing all these wonderful other opportunities. All of it. You're missing all the precious metal rally. And then people are stuck on Bitcoin, and people are stuck on this, and people are stuck on, bro, there's things that are working. Go to the parts of the market if you're a trader. Go to the part of the market that's working. And then one day when Hood works again, when SoFi works again, or when Palantir works again, which it will, then come back to that part of the market, because at the moment, Wall Street is not rewarding high growth. And in fact, they're compressing PEs. Once you understand all this, no problem. You'll survive. And preserve your capital, folks. If you did make some decent money last 3-4 years, don't let it go. Turn the computer off. Go away. Go away. Come back in a month. Don't press. Don't revenge trade. Don't do any of that stupid stuff. You're going to blow your account. That's all you're going to do.
Agreed. So my little title here, Sergio, says, what has the market taught me over the last couple of months? is one, don't get stubborn, take the loss. I feel
Yep.
like I already knew it, but these are lessons that get like retaught 3 or 4 times before they really sink in. And then the other thing is you have to see where the landscape of the overall market is,
Mhm.
because I was like really paying attention to earnings this go around. Normally I'm not like that close, only on the stocks that I'm in.
Mhm.
But I started seeing great companies reporting great earnings and the stock price was still getting hammered.
Yep.
That was a trend, and I think the latest one and the biggest example is Nvidia.
Yeah.
Right? I mean, we can't ask for them to do anything more than they're doing, bro. Like
Mhm.
they're not just delivering, they're raising guidance and then they deliver again and then they raise guidance again. If you look at the last 3 or 4 earnings reports, and this is like a house of cards, and Nvidia has been propping it up and delivering. We can't ask Jensen to put on cooler jackets. I mean, the dude is doing everything that he possibly can. But I think at some point, hearkening back to your earlier point, because I feel like this is what the market has taught me, is valuations still matter.
Still
Value
matters, right?
the euphoria will only take you so far. At
Yeah.
some point, Palantir intraday at $220 just makes no fucking sense, Sergio.
Yep.
It just doesn't.
Well, the other
And
thing, the other thing, TJ, Wall Street is very funky. This is how they distribute, right? They cannot distribute when things are going down because they're just going to get hammered themselves, right? So when Nvidia earnings are that good, see, that's what I'm saying, So when Nvidia earnings are good and stock gets hammered,
they weren't
that's how
just
they
good,
that's how
Sergio.
they're distributing. And
They were
also,
great.
folks, yeah, they were great, and
Yeah.
guidance was good, but when a stock reacts the complete opposite of the way you think it should react, you watch out, because that's how they distribute. Number one. Number two, if you look at the index, take a look at the index. I don't know how you guys have your charts set up, your chopsticks set up, but look at the volume. For me, volume precedes everything.
Huge,
Volume is telling you the story. The price follows volume. So when you look at the SPX index's volume or SPY's volume, look at the last 3 months. Every red days bar, volume bar, is a lot higher than every green days bar. On down days, the volume is going higher. On up days, the volume is shrinking. So that means what? You're being distributed. Your exit liquidity for Wall Street. That's what you are. Once you understand this, then you protect yourself. You just pull back, you size down, whatever you need to do, because making money on a bull market is super easy. Every idiot can make money on a bull market. But what do you do when a bear market shows up, or there's actually a bear market going on with all these stocks? Look at a stock called Duolingo.
Yeah.
Right?
Oh yeah.
550 high, just
Probably
hit
like
90
under
today.
$100 now, right?
It's 90 today.
Yeah, that's
Down
crazy.
another 20. So now you sold the cash secured put on that. Now what are you going to do? You sold it yesterday. Because of a high IV, good premiums, week out, you sold it. You sold it for $3. Now it's 20. Now what are you going to do? All I'm saying to you guys is put all the tools in your toolbox, take a break. If the market's going against you, if your account's already down 30% with the index only down 2% from its highs, you haven't seen anything yet. This is not being negative, by the way. I am not negative on the markets. I trade what I see. If the price is this, I'm not smart enough to argue with the price. The Wall Street's deciding this is the price. I'm like, okay, cool. That's trading. Investing, completely different. Completely different story. Yeah, you should have a 3-5 year horizon, because ultimately good companies, not hims, good companies do perform. The management is different. Everything is different about these types of companies, right? So please protect yourself. What is going to happen in the next, I don't know when this is going to happen, but when it does happen, watch out. And if I'm hoping it's up. If it's not up, it's down. Okay, you short. Go buy some puts. Go short some stocks. Go whatever you need to do. But again, please don't get stuck with these 15 stocks that all of social media is talking about. There's amazing companies out there that you will make money, even on the worst bear markets, because institutions have to invest. How much money do you think came out of Nvidia yesterday and today? Billions. Where do you think that money is going? Look at
Yeah,
Walmart today.
probably about 200 billion, right? Something
Yeah,
like that.
look at Walmart today. Market's down on its ass. Up. Simple, right? And when the rotation does happen on Walmart, you will know how. Create your 52-week high list, because that's how you catch rotation. 3 weeks ago, nothing but financials were on that rotation list, right? And then now it's a completely different list. That's how you become successful, as opposed to getting stuck in something, right? You have to look at opportunity cost in trading. You're missing it. You're hoping and praying that your stock you're stuck with at 30% lower one day is going to do something. Okay, while the world is going by you. So as a trader, again, I'm not talking investing now. So be careful, understand what could happen. What could happen, right? And just change your outlook a little bit. Just look at different things, different ways of skinning the cat. So that's what I wanted to say.
Yeah, well, I did one thing that I do want to clarify though, because I feel like so again, I feel like I'm revealing things about myself that I don't want people to know, because I'm fully transparent on selling put, selling calls, collecting premium, but I'm not always fully transparent on how much experience I have in the stock market. In a previous life, I used to have a Series 7. So anyway, I want people to understand one thing. You made a comment about market cap and Nvidia losing market cap. Guys, market cap does not equal actual dollars. Like Nvidia losing, let's just say it's 200 billion in market cap. That's not exactly 200 billion dollars moving from Nvidia somewhere else. Like there's let me just clarify that for you guys, because that is just, you're going to get that answer wrong on the test if it was on your Series 7. So I'm going to try to put it on here. Thankfully, AI is really good at helping us out these days, because we're all a lot smarter thanks to this freaking invention called AI. Bear with me. So just to understand, is it showing up there, Sergio, or no?
Yeah, it is. It is.
Okay,
Yeah.
super. So I asked Nvidia, if Nvidia drops 200 billion in market cap, is that the equivalent of $200 billion essentially moving from Nvidia somewhere else? It's like, no, a $200 billion drop in Nvidia's market cap is not equivalent to 200 billion in actual cap being removed from shares. It represents a reduction in the theoretical total valuation based on the latest traded price, meaning investors are willing to pay less for the shares, not that 200 billion in physical cash was liquidated. So the reason I wanted to harken back on that point, because whenever you take your Series 7, they give you the questions that you got right and wrong, right? Like your answer key. And there was something along those lines, and I got that question wrong like 3 or 4 times, because they ask it like 3 or 4 different ways, because they focus on different sections. And I got all of that wrong because I just didn't totally understand that. I was like, and it still doesn't like fully register, to be completely honest with you. It's just like there's 2 other things that I have a real hard time with in the market with the concepts, and it's fiscal policy versus monetary policy.
Yeah.
Like I have, and maybe you have a lot more experience in the game than I do, Sergio. Are you super familiar with fiscal policy versus monetary policy? Because in my mind, they're very like I always misspeak, right? Like I always say, I always mean something when it's something else, because I'm not super clear on it. I know one like has to do with like the interest rates and with the banks and stuff, but I don't know exactly which is which. Can you educate me on that real quickly? Because every time you come on the channel, I try to get educated on something.
No, absolutely. Yeah. So fiscal policy broke a long time ago, but it totally broke during the 2008 GFC. Okay. So what did we start doing during the GFC, the Great Financial Crisis, is we created something called TARP, Toxic Asset Repurchase Program. And it cost the taxpayers at that time $800 billion to save all the banks that you guys heard about, including B of A, Countrywide, Wachovia, all these banks. Okay.
Yeah.
Yeah, definitely. Position size, the 3 Ps:
By
patience,
the way,
position
Rick,
size, and
he
timing.
contributes a lot on our
So,
WhatsApp group. He's a wealth of knowledge.
so, so fiscal policy is basically Washington spending money they don't have. So, for example, in year 2025, the total receipts of the Treasury, which Treasury collects taxes, Treasury collects all the receipts, was
Right.
$5 trillion. Five.
Hmm.
However, we spent $7.5 trillion. So here comes the monetary policy part of it. Fiscal policy is in the toilet because we spend more than what we take in, just like
Right.
your own household budget. If your income is $5,000 a month and you're spending $7,000 a month,
Right.
where is that $2,000 going to come from?
Right.
You're going to put it on credit cards and you're going to go to hell.
Agreed.
Government does the same thing. They have a budget of, they have an income of 5,000 or 5 trillion. They spend 7.5 trillion.
Right.
Now comes the broken fiscal policy is going to affect monetary policy. Monetary policy is run by the Fed and
Right.
and the Treasury to a point.
Mm-hmm.
While the Fed goes, hold on, I have a $2.5 trillion deficit that I have to find this money somehow because we don't have a balanced budget. Okay, what do? We issue IOUs. We create all these synthetic dollars. Since we've been doing, actually, when we went off the gold standard in 1978, but it completely accelerated now since 2008.
1971, Richard Nixon.
Right, exactly. So a broken fiscal policy is forcing a broken monetary policy. The Fed has to follow that policy. What they do now is they just create the synthetic dollars, push it into the market. How's that? Very obvious. Go look at the US M2, that's the money supply.
Yeah.
When you print so many dollars, actually they don't print, they just add zeros to the ledger, which is the broken monetary policy. They just put it out in the markets. Well, that money is into the markets. That's why, by the way, folks, you are losing 7 to 8% of your buying power a year, unlike the government says it's 2% inflation. It's just horseshit. It's not 2%. They create more dollars. They devalue the dollar. They have to create more dollars because we have a $2.5 trillion deficit. Those IOUs, right? The bonds, notes, short-term, long-term, have to get created in order for the fiscal policy that's broken, right?
Come on, guys.
And the monetary policy has to follow that. So fiscal policy comes first, monetary policy follows fiscal policy. Simple as that. And look at M2. Just go Google it. Google M2 growth in the US. It is so simple.
So it's right here. It says, what is the current? Is it showing or no?
Yeah.
Okay. It says, what is the current M2 money supply? Basic info. US M2 money supply is at current level of 22.41 trillion, up from 22.32 trillion last month.
Yeah, look at it. Like if you can put
21.42 1 year ago.
Put up a chart and you'll see it better because picture's worth 1,000 words. Like if there is a chart, look at the M2 chart.
I don't know if images would give me anything. Does that give me something like right here maybe?
No, just Google like M2 US M2 money supply growth.
I don't know if that's big enough. Hold on.
Yeah, that's close enough. So do you guys see what's happening here? This is the top line is the US M2, right? This one in the middle, the black line, right?
That's crazy.
And do you guys notice something that it's going from the lower left to the upper right?
Yeah, like
so there's so that is just like the S&P 500 chart. So when the money supply gets shrinking, like they pull back, what happens? Stocks go down with it. When the money supply is flying, all risk asset classes go up with it. And it literally there's a pretty decent correlation between M2 and stocks and all risk assets. And so
can you speak on liquidity in the market, Sergio? Because I know that some people, like, I see comments, oh my God, this is boring. Like, you're really giving a lot of gold here, but a lot of times, like, there's lack of liquidity in the market, and that causes like asset classes like Bitcoin specifically to go down because Bitcoin relies on liquidity, right? Like if you really start studying the price movement of Bitcoin, the more liquidity in the market, the better for Bitcoin. If the market needs to find liquidity, sometimes the fastest place to find liquidity is to go dump crypto.
Yeah.
Can you speak about how sensitive the market is to liquidity, and why do they refer to dumb money as exit liquidity in most cases?
Well, I mean, look, it's been referred like that, although things have changed since the pandemic because retail is a lot more powerful than people think it is.
Yeah.
You know, it's not dumb. I mean, dumb money doesn't exist anymore. You know, everybody knows something these days. In the old days, my days, there's definitely dumb money. But so the correlation between, once you understand the correlation between money supply growth, which is forced, by the way, which is forced by the Fed to do this, because we have to issue these bonds and notes to close that gap, the deficit, right? So when there's that much money coming into the system, $2.5 trillion a year, well, that money is going to chase return. Where does that money go? That money goes into risk assets, it goes into gold, it goes into stocks, it goes into, you know, it's, by the way, this is not a US issue. It's a global issue. And Japan actually is the worst criminal when it comes to that, right? You know, we talk about, the other thing we should maybe 1 minute talk about is debt to GDP ratio, right?
Yeah.
Our debt to GDP is 130. You know who leads the world, the globe? China at 330%. Japan at 230%, right? So basically the whole globe, TJ, is inflating. That is exactly why gold is at $5,500.
Yeah.
Okay, that's exactly why silver is at $100. And the correlation, somehow there was a correlation for a long time between Bitcoin and crypto and M2. Somehow that broke. Now it's going the other direction, right? And when it comes to your question on liquidity, look, liquidity is something that's very fleeting, and I wouldn't pay. There is ample enough liquidity, but it's in the wrong hands. The hands that hold the liquidity are not the types that you want them to hold it. So I know you're asking, Sergio, with bonds, the metals are rallying, dollar is dying. Yep, you're getting paid back the dying dollar. Absolutely, gold is definitely confirming that. And who's the largest buyer on gold by the thousands of tons? China, Turkey, a lot of European countries. Because what's happening is that they have finally figured out, TJ, that they say this: we're inflating our way out of this problem, our debt problem. So, for example, you're China or UK or Japan, and you, as the Treasury, I issued a 20-year bond, and you know I'm AAA guaranteed, safe. You know, US is the best, and you come buy that bond, right?
Yeah.
Okay. Well, you're going to have to hold that to maturity for 20 years. You're not going to trade it. But you're getting about 3.5%, 4% out of it for 20 years. Let's say the coupon is 4%.
Not horrible. Yeah.
Okay. Well, not horrible, but let's think about this. What is the US government doing though? They're debasing the currency, they're devaluing the currency. While you're getting your 4% every year, you're losing 6% on the currency. So finally the world figured out, they go like, okay, F these people. And that's why they're selling all their treasuries and going into gold, because they go, by the time I get my money back, when this 20-year bond matures, I mean, I'm down net negative. Nominally, I'm getting 4%, but then I'm losing on the currency by 6% every year. These people are inflating their way out of it. And what I get for the same $1,000 bond, each bond is $1,000. 20 years from now is only worth like 300 because they devalued the currency. The currency is in the toilet. So they figured out, they go like, okay, let's just go buy gold. Let's go buy silver. I'm very surprised. I really am, that crypto is not getting support throughout all this, because the story on crypto was debasing on the US dollar. They're trashing it, making it toilet paper. Crypto should do well as a holder of value. I'm not calling digital gold this and that. But crypto are getting sold off by 50%. I'm like, whoa, what's happening? You know?
Agreed. What are your thoughts on? Do you have a couple more minutes or no?
Sure.
What are your thoughts on PayPal? Because I've got a shitload of puts at. Well, I had them at 50, but I took my medicine and I was like, I thought 50 was a good deal. It turns out that the good deal is over there at 40. So now I'm sitting at 40, plenty of time on the clock. I feel like I'm okay based on everything that I think that I know about PayPal
Mm-hmm.
and the CEO that takes ownership of his role in a couple of days. I'm excited because I think he's going to go in there. Heads are going to roll. He's going to pull a block. I think that 5,000 people are going to unfortunately lose their jobs, but they probably never needed that. I mean, PayPal just overhired. I feel like the dinosaur mentality of just hired a bunch of people to do little stuff. Now with the artificial intelligence being able to do a lot of those things, I
Mm-hmm.
think that PayPal's slated to do well from a valuation perspective. If you're one of those people that you think valuation matters, I think that PayPal is attractively. Hold on. I think that PayPal is attractively priced here at
Mm-hmm.
40. It would be extremely attractively priced. We had those rumors that is going to potentially looking at a buyout and stuff, and now it's not.
Well, okay.
What are your
So
thoughts? Have you followed PayPal at all?
yeah, I follow PayPal, but I'm not going to touch it. Right? It's a falling knife because I'm not looking at it on a fundamentally. We can talk about fundamentals.
Sure.
So let's talk real quick about the effect of AI on this country and what's going to happen. And the
Yeah.
perfect example of that, and this is going to be the playbook, folks, by the way, the perfect example of two companies. Okay. One is CRM, which is massive company,
Yeah.
which is Salesforce.com. And the other one is Block, which is
Yeah.
run by the ex-founder and CEO of
Dorsey.
Dorsey, right?
Yeah.
So what did XYZ or Block did yesterday? They literally fired half of their workforce and stock went up by 20%.
Yeah.
This is going to be the playbook, right?
Yeah.
Number one, wherever humans are not needed, they're going to be gone. And so XYZ, which is Block's yearly gains on laying off literally half their workforce,
Right.
was $600 million a year. Stock market cap appreciated by $6 billion with that decision. Now, fundamentally, could PayPal do the same thing? And should PayPal do the same thing? Absolutely, they should do the same thing. Now, we're all going to say, well, Serge, you're ruthless, you're this, you're that. And I'm like, look, man, this is coming. AI is going to replace every single job. I'm not buying a word of the tech bro, such as Sam Altman, snake oil salesman, selling that no, AI is going to create wonderful things. And as much as I love Elon is also talking about universal high income. You don't have to do anything. You just have to go play golf for 24 hours a day. Bro, yeah. I have rent due. How do I pay that? Unless we don't use currency anymore and we're all going to be in utopia. I think AI is going to be the next massive change that comes to this country. Now, let's take CRM. CRM in its own market, bear market. Adobe in its own disastrous bear market. ServiceNow in its own disasters. These stocks are down 70, 80%, folks. Mm-hmm. And if you've been selling puts, then you should know. But CRM did the same thing. Had their best year, 41.5 revenue, 41.5 billion in revenue, except the CRM CEO said, no, I'm not going to fire anyone. I'm going to have AI and agentic AI make my people better. What did CRM stock do you think? It went down. Yeah. So the difference is this. Should PayPal, because they're a transactional business, most of the stuff that's done by humans is done by agentic AI for sure. And Block, which is Stripe and all these other companies involved in Block, right? They said, well, we don't need humans to do any of this anymore. And PayPal should definitely do that. If they do that, they'll survive. If they don't do that, PayPal is a business on its way out. Because look at PayPal. PayPal was what? I mean, if you look at a 10-year chart of PayPal was like a $350 number.
Well, in the height of COVID, it was, I think, close to 300, and now it's at call it 5. So that's about an 80% retracement.
Yeah, exactly. So I think your price if there is a deal done, because there were some rumors last week because it was under 40.
It's going to be above 40, and that would push my contract to the finish line quickly, and I'd make a shitload of money.
Yeah, that's going to be your savior, because even if there is no deal, I think on the next earnings report with the new CEO, like Elon did, he should come in and catch the kitchen sink and say, how many people do we have here? 30,000?
20,000, I think.
20,000? Okay,
like
we don't need 10,000 of these people, and stock will do exactly what XYZ
25% immediately, I think.
Yeah, I think so. But if I don't know who's going to take them over. Even if they are taken over, I don't think the premium is going to be like wild and crazy. But I'll probably see 55, 60.
I think it would sell between 60 and 70 bucks.
I don't think it'll go there. But I was thinking, like, I was talking to my group. I was like 55 to 60. I think from 40, about 50% premium is fair. Look, it's going to be sold at fire sale, because whoever comes in is going to absolutely just lay off.
Well, I mean, objectively, especially if you look at other companies out there that are private, like OpenAI and other companies that have big multiples.
Yeah.
Objectively, if you just took Venmo, and you saw what they were doing, Venmo would command $20 billion in the open market right now. So,
I honestly, TJ, when it comes to fundamentals, like I think it's kind of reflected in the stock price, and what is known by everybody, and what I know is known by everybody. There are a lot more smarter people than me called, so-called analysts that I used to work with on the desk, which I thought they were dumber than shit. But then I was like, okay, these people have MBAs, these people are number crunching, these people are figuring out, but ultimately the market is deciding. The price is the price.
I think the thing that drives price the most is sentiment. And I think the sentiment of PayPal is in the toilet, because they have all of this free cash flow. And the only thing that they feel they can do that's creative is to buy back shares. And Mr. Market for the last couple of years has been like, we need more than that. Like, we need more than that.
They need to get rid of people. And I mean, look, I bought UPS after waiting 3 years to buy UPS. Okay. I bought it at 96. Stock is about 120. The day I bought it is the day they laid off 40,000 people. I mean, look, it's horrible. Like, all those 4,000 or 5,000 people, those are high paying jobs, by the way. They're not cleaning toilets at the block. Okay. Those are all people making six-figure income. Well, yes, that's going to affect the economy, right? They all have homes. Are they going to run late on their mortgages? So you have to start thinking of AI's effect on all this other stuff, because people go like, oh, yeah, it's going to be wonderful. It's going to be utopia. You guys don't have to do anything all day long. You can go play golf, and then money is going to come down from the chimney somehow. I'm like, bro, no, I have rent due. I have my car payment due. How am I going to survive this? Right?
Yeah, I'm extremely bullish on SoFi, and I posted in our chat yesterday. I go, the one thing that does scare me about SoFi is their target market is Henry's, right? The high earners, not rich yet. But that's the issue. They're not rich yet. So they go lose these high paying jobs. How long are they going to be solvent, right? 6 months, maybe a year. So default rates, if there's one thing that scares me, even though I know the FICO scores and all that stuff is real high, but the reason it's real high is because these people are gainfully employed. So they're responsible when they pay their bills, but people don't pay their bills, not because they're shitty people, it's because they no longer they have an interruption of income, and they don't have enough money to pay their bills. Because I had shitty credit at one time, Sergio. It's not because I was a bad dude. I just ran into a situation about 2 years in my life where there was no consistent cash flow in my life. So I had to pick and choose what bills I could pay. It turned out that rent was more important than credit cards. You know what I mean? Like, look, I've lived that life.
There is like a bunch of articles on the internet that even if you're like in the US, especially on the coasts where I live, if you're like earning $150,000 a year, you're living month to month. Think about it, man. Think about it, right? And that's where the powerhouses are, the coasts. And I'm like, if you're living month to month and you're earning $150,000 a year, you're doing something very, very wrong, because you're living way above your means.
There's two things, Sergio. There's two things. One, you're doing something really, really wrong. And two, if you're making $150,000 in California, you might want to consider moving to a state where 150, if you can keep the income.
If you can keep the
If
income,
you can keep the income, come to Texas, come to Florida, no state tax. That's a fucking pay raise.
Yeah,
And not to
for
mention
sure.
the kind of house that you can own in Texas in
Yeah.
comparison to California. You're going to live in a mini mansion over here, if not a
Yeah.
mansion. I mean, that's people have made that move, right? People have sacrificed Sunny and 75 for humidity, but a lot more laxed rules, and your money goes further or farther, whatever the term is.
100%.
Uh,
100%.
but
I mean,
it's
look, a lot
hard
of
because
people
you
are
don't have the
leaving
Pacific Ocean, right? It's hard.
Yeah, I
It's-
mean, look, a lot of people are leaving California. I mean, I would leave in a heartbeat, but I have kids, one in college, one then like I can't do yet. But second I can, I will. Now, so anyway, so thank you for having me on, buddy. PayPal, I know your position. I know you're way out there with I think December something puts or whatever.
I'm chilling at 40 right now. Chilling. We'll see what happens.
The best thing that could happen for you is actually
The buyout.
a takeover, because in the takeover, you honestly, by the time the takeover is done, I think your puts are further than the takeover, so you'll collect the premium faster. But I'm like,
whatever the acquisition price is, if it's above 40, which I have every reason to feel that it would be
absolutely,
above 40,
yeah.
Then everything gets pushed to the front, and the contract becomes null and void when you sell options. And I've had this verified by like 5 different sources.
Oh, that's true. Yeah.
There's no refund.
The other thing that can happen is if it's a stock deal, if it's not a cash deal, you're going to own the stock of the new company, then they get converted. Look, all we're doing is mental masturbation at the moment. I think my thing is, please, folks, do not try to catch a falling knife. Okay, don't, because you can go try that if you're crazy enough. Get a really super sharp blade and throw it from 6 feet up and try to catch the handle. I guarantee you're not going to catch the handle more than twice, and 8 times you're going to get slashed. You're going to have all the marks in your palm. My thing is, just be careful. There is always the other side of the coin, and you guys have seen the other side of the coin on all these names, right? SoFi's and PayPal's and hoods and whatever. They got cut in half. There's no bad news out there. Okay, so stocks go down.
There's a little bit on the private credit sector today, but
but
right again, here on my title though is what has the market taught me is that conviction and sizing. Those are the big things right now, and I made a huge transition about 90 days ago. That as much as I love the SoFis of the world, I have to have a linchpin in the portfolio. I have to have a cornerstone in the portfolio that can withstand the test of time, that can take on the U.S. government and survive. So Amazon became my linchpin.
Okay.
I looked at all the valuations of the Mag 7 that I was interested in. So scratch Microsoft because it is an attractive valuation. Scratch Meta, but I don't like the companies for personal reasons. Because I think Bill Gates founded Microsoft, and I just think he's one of the most probably top 5 evil persons of all time. Those are personal biases, right? We're entitled to those.
Absolutely.
I think that social media, as amazing as it is to connect, I think that it has caused so much mental illness that
100% agree.
I just don't want to make. I'm thankful I've made money on Meta. I left a lot of money on the table. But I just don't want to be in that space for personal biases, for personal reasons. So then there was Amazon, and I was like, okay, I have fundamentally, I also have issues with Jeff Bezos, just calling a spade. But then I just looked at it, okay, from the ones that are left, Tesla, I lose sleep at night over the valuation on Tesla, and it's my favorite company in the world. But it's just like, I can't make sense of that valuation. So I can't make that the linchpin. And I just looked at all the different sectors of Amazon and where the P ratio is in comparison to the last decade. The only number that doesn't make sense, and this is just where I just don't understand the numbers. It's just where you just have to admit that you're not as smart as the next guy, right?
Mm-hmm.
Is I don't understand why the PEG ratio is so high on Amazon right now. I can't quite understand it, because if you look at the PEG ratio, which is a pretty good metric, is still pretty overvalued. If you look at that, if you just the P ratio compared to where it was, the PS ratio compared to where it was, it seems like a deal on the surface. but then you sneak into this peg ratio and you're like, hey, wait a minute. This thing could easily go back down to 150, 160, which was the April, the debacle, Liberation Day or whatever.
I think if the market sells off 20%, all the Mag 7 is going to get a haircut of 20, 25, 30%, right? Because their beta is higher than the average. But my thing is this: market direction makes a huge difference on the Mag 7 more than any other stock. Okay. Yeah. Because again, those are the most liquid companies that institutions can sell.
By far.
You know, they cannot sell like a mid cap. They will crush that stock. They will go down 50%.
Yeah.
But then what do they sell? They sell mega caps, you know, all the Mag 7, because that's the easiest one to sell. There's bids enough. There's liquidity enough in those things, right? Because if somebody needs to get out, they're going to sell those first. So, but then it becomes the chicken or the egg kind of a thing, because a lot of people are kind of saying, confused actually. They go like, okay, Microsoft is down 30% from the high. Amazon is down 20%. You know, Google is down 15%, and Meta is down 20%, and you know, Nvidia now down 15%. But how's the index staying 2%? You know how, folks? Because for 4 years, the Mag 7 outperformed the smaller caps. This Mag 7, by the way, S&P 500 is a market cap weighted index.
Yes.
So those top 10 stocks make up about 70% of the index. But what happened? Something goofy happened, TJ. While all the PEs were getting compressed on all these high flyers, right? People discovered Clorox. People discovered Johnson & Johnson. People discovered Corning Glassware. People discovered Southwest Airlines. People discovered Walmart. And those are the ones, they are still in the S&P 500,
yes,
but they're the ones holding the market up, not the Mag 7, because according to the Mag 7, the market should be down 15, 18%, the index anyway. Yeah. So I'm looking at it this way. I just want to warn folks, I am not bearish, number one. I don't want a bear market because I think it's going to take a lot of people to the poorhouse because they do not know what to do because they haven't seen one.
Yeah.
I don't wish bad on anyone. However, please put all the tools, potential tools that you may not even use once a year in your toolbox and apply them. And once you have all the tools in your toolbox, over a period of time, you'll automate things, and then you'll be like, oh, yeah, I've seen this before. This is the strategy for this thing. This is the strategy for that thing. This is the strategy for this thing. So I'm just trying to, pass on my experience. And some people like it. Some people don't like it because maybe I'm too forward.
No, I think what it is, Sergio, is that nobody wants to hear their girlfriend's ugly, and sometimes the truth stings, right? Like in the Bible, it says, you shall know the truth, and the truth shall make you free. But I feel like there's another sentence that's missing, and sometimes it's going to piss you off, right?
Yep. And
the truth is offensive. You always want to shoot the messenger, right? But I don't want to let you go without asking for your input on BM&R. It's the biggest bag I've ever held. When I got into this thing, I said, I'm going to look at this stock in 2030 and we'll see what's what, because I feel like all of this narrative is going to come to fruition. I don't think it's going to happen right away. And if Ethereum doesn't do what people think, then we're all screwed. It doesn't matter what Tom Lee, he's like the world's shittiest meteorologist right now, right? It doesn't matter what he thinks, what he says. It doesn't matter. I think a lot is writing right now on the Clarity Act, and a lot is writing on the overall adoption and use cases of Ethereum, and we'll see what happens. I have a real big bet on it, I believe. But where are you at? I know that SBET was your board. You understand?
I took my L. I bought it at 17, took my L at 12. It's at 6. So I like taking L's. Okay. I can't just, because I took the L, but then I made 2x of the L on other stuff that is working for me. So all I'm saying is you got to take L's. I'm a huge fan of taking L's, because the thing that you think you cannot go lower will go lower. I mean, for example, HIMS, right? I mean, if people are being, 60, 50, 40, 30, twice down, it's gonna fucking, what are you people doing? Or people go, HIMS, if HIMS is bad, then Novo Nordisk should be good. What? That just made a 52-week low at $38. I'm going like, listen, my thing is, I know I was on your show like a few months ago when I think, was it Uzi, the chartist, right?
Yeah, Uzi Options. Yeah, Uzi Options.
Right. Okay, so BM&R is going to follow Ethereum.
Correct.
Ethereum looks like in the goddamn bear market of all bear markets. Until Ethereum goes higher and substantially higher, BMNR is not going to go anywhere. That's one.
Agreed.
Number two, Tom Lee becoming from a hero to zero was really quick, right? And it's okay. And again, I honestly don't fault Tom Lee or Michael Saylor whatsoever. They're doing exactly what they said they're going to do, right? Because they said we're going to sell shares and buy Bitcoin or Ethereum. That's what they're doing. Why? But again, this goes to show, TJ, no one knows. No one knows. I don't know what's going to happen to Ethereum. At the moment, it's in that goddamn bear market. It's down 65% from its high. Okay. Now, are we close to a bottom? A lot of people are going like, oh, it's 1,800 the bottom. It's 1,400 the bottom. It's okay. I don't know.
We don't know. Nobody knows.
Once I know, I will definitely let you know. At the moment, it's in a bear market. So is BMNR. So is SBET. So is MSTR. So is this. So is that. I'm still dollar cost averaging Bitcoin every Monday, the same dollar amount. I still believe what the narrative is still valid. And by the way, for all the people who love SoFi and PayPal and all Block and all these other companies, if what Tom Lee says is going to take place, meaning Wall Street's going to get recreated on the Ethereum network,
right?
We don't need SoFi. We don't need PayPal because those are all middlemen.
Right.
We don't need JP Morgan. We don't need any of these people. And that's why I think there's a huge push. Because do you think Jamie Dimon is going to allow JP Morgan to just go bye-bye? No. That's why they've been against crypto forever, because crypto is a network that you can put shit on and do very low transactional cost, right? Get rid of the middleman. You get rid of Uber. You get rid of all these companies, all the middleman companies. They make the juice in the middle. Well, why do I need a bank? I can send money and lend money to somebody on the network like this. I don't need FICO score. I don't need this. I don't need any of that. So if Ethereum is going to go higher and Tom Lee sees this future for Wall Street, all these other stocks are not necessary, in my opinion, anyway. So
yeah, because there's a company out there called I want to say it's Tether.
Yeah.
And Tether, if you studied it a little bit, and I went down this rabbit hole, I don't know, a year ago, maybe. Mm-hmm. And I want to say that Tom Lee finally mentioned it because I was waiting for this dude to mention it. But there's a lot of people that don't know that Tether is a very, very small company with a few hundred people, maybe.
Yeah.
And it makes a shitload of money compared to like JP Morgan. Like talking about like trimming the fat. Like they have figured out a way to make, I'm talking about billions of dollars. Like this company might make like $20 billion net. Like it is.
They're the ones that are issuing all the USDs, and you know they go back it up with US Treasuries. They're the largest buyer of US Treasuries. Yeah, so there is a simpler way of doing.
I don't see how JP Morgan is going to take that L.
Yeah,
it's going to be very interesting.
Like Tom Lee goes to Jamie Dimon and goes, Jamie, you're fired. we don't need banking. We're going to put everything on the Ethereum network. Dimon is going to go fuck yourself, Tom Lee. We're not going to work. We're going to crush you. And I'll bet you anything, there is some stuff going in the background with this. You know, the Bitcoin was a wonderful tool to protect yourself from debasing of the currency, right?
All right.
And you know what they did? About 2 years ago, they started introducing all these derivatives on Bitcoin. I'm going like, now they introduce futures, introduce options, introduce this any time, man. There is derivatives, you know, created on this underlying. Man, that underlying gets just more volatile, more crushed than anything else every single time that happens. But before then, Bitcoin was wonderful. It was going up because market was going like, okay, we're printing like trillions of dollars. How do I protect it? This is a finite number of things that they have. We can't create more of this. It's a holder of value. Fantastic. Yes, it's been volatile, but at least it was just keeping pace and protecting yourself. Now, all these derivatives are killing Bitcoin, Ethereum, all these, I'm going like, I wish we never did that. But anyway, we did.
So here's
So
Sergio's channel, guys. If y'all want to give him a follow, he's already up to 4,000 subscribers. He should be at 40,000. He
no,
goes live.
can
Goes
I
live
talk
almost
about that
every
for a little
day.
bit? I created the YouTube channel just to warn people and pass my experience. I'm super, super, super passionate about one other thing that I'm doing now, which I honestly, if you guys can help me with that, I would appreciate it. Is I created a website under my name, SergioAvedian.com. In fact, we're about to announce some ridiculously nice deals with Lyft, with Uber, with this. I have another channel that I work on the gig economy. I work with Uber, I work with Lyft, I work with DoorDash, I work with all these companies. I'm thinking financial freedom comes through financial literacy. And financial literacy is absolutely in the fucking toilet in this country, going from middle school all the way to college kids. Okay? So if we can create a world that people are financially literate, and by the way, there is a reason for the top 10% owning 87% of the assets of this country. There's a reason for that. Okay. So my goal is to improve financial literacy for gig workers to everyone, from gig workers to everyone and anyone. And I have a blog, like all these wonderful articles we put out, like the last one, for example, we put out it's free. It's a free newsletter. All you have to do is put your email in and get the free newsletter every Monday at noon. It comes out, and we already have like I think 30 of them. And it's now also in Spanish, and also you can listen to it. If you don't want to read it, you click the listen button and listen to the article. I want to improve financial literacy in this country, from the gig worker all the way, to elementary school kids and high school kids. And I'm going to do this as well as I can. So please, if you can go subscribe to the newsletter, you'll educate yourself. Financial freedom through financial literacy, folks. That's period. That's what you need. And we need that. We need to move the bottom 50% of this country up. We don't need the top 10% to go higher, because they already know what to do. All they do is accumulate assets. We need to educate folks to understand all of this stuff, and that's my goal. So hopefully it'll work.
That's awesome, man. Well, I put it on there as you were talking, so hopefully people
I
will
appreciate it.
heed it. I subscribed to the little newsletter while you're on there. So
yeah. Thank you. Yeah.
You'll see TJ.
I mean, most of the stuff already. Most of the stuff, but what I'm thinking is,
but the thing is, it's like going to church, man. You gotta go get the tune up, right? A car goes, if you have an internal combustible engine. Did I say that right? I've had a Tesla for a while now. Is that what it's called?
Yeah.
Or no?
Yeah, but
I'm just saying, you need to get the oil change. You need to get the tune up. You always need the refresher, man. And it's just like I said, it's like the stock market taught me that sizing and conviction are extremely important. And I feel like I already knew that. I've known that for a while, but sometimes you get retaught these lessons over and over. And it's like going to school. You go to school, you learn, and then things are going well and you forget or you dismiss. And then life teaches it to you again, right? Like Mr. Market will teach you the same lesson over and over. Just make sure that it's not so painful each time. Anyway, man, I do got to get going here shortly. Do you have any other parting words, Sergio?
No, keep your head up. I know it's tough. The markets are tough, but I'm just saying, folks, it's, just listen to the market. The market knows best. You may have an opinion, just like I do, about a price of a stock.
Yeah.
But at that second, that price is the price. There's somebody buying it.
Perfect.
The price is always perfect. And don't argue with the price. Have an opinion about it. Is different than arguing. So, it's low, it's high. No, it's that right there. If you're trading, pay attention to that. And other than that, have a great weekend. I'll see you around. If you do come out to LA one of these days, we'll definitely have to get together.
We're I want to say June is a trip to California. I don't know the details yet, but I'll get with you. we're able, because I don't know if it's Northern California or Southern, but if we're able to, we'll definitely make it a point to swing by there and grab some lunch with you because I missed you on the last go around.
Please do. Yeah. I mean,
But,
I look forward to it. We can come over and I'll do some for you, some Armenian barbecue. There you go.
that is awesome. Sounds good, man. I look forward to it. Have a good one, Sergio. Appreciate
you too. Take care. Much love.
Thank you. Appreciate you guys for listening in to Sergio, man. He's an absolute wealth of knowledge. Really happy whenever he comes on the channel. But anyway, guys, conviction sizing is a real big thing. I am not the best example for sizing because I'm always considering the money that's on the sidelines. So keep that in mind. But I am going to try to do a better job of sizing and like pretending like there's no more money coming in. That way it could be a better example of you guys because I don't want y'all looking at the ratios on the portfolio and be like, oh, I could do that too. I don't know if you can. I don't know if you can. So keep that in mind because I don't ever want to be in a situation where, people follow me into trades and then they could potentially blow up their accounts. That's just the kind of stuff that makes me lose sleep at night. So, I take the responsibility that I have as the channel grows a little bit. I take that responsibility very seriously, guys. So anyway, hope y'all guys have gotten some out of it. Just keep your head up, man. There are brighter days. The one thing that fundamentally will never change about me when I'm selling options is I sell puts on stocks that ultimately I would be okay owning. I prefer not to own shares anymore. But at the same time, if gun to my head, I have to own SoFi at 15, I feel like I'm going to be able to manufacture the win. Gun to my head, if ultimately we have to own SoFi or PayPal at 40, I feel like I'm going to be able to manufacture the win. I have several strike prices on Amazon, right? From 210, 200, 180, 160. I feel like I could roll those down and 160 is the acquisition target. I feel like if I had to go all in on Amazon at 160, I don't care what the world throws at us. I don't care what the market throws at us. I feel like we're going to be in a commanding position because we would get a hold of a great company at a pretty dang good price. And that is a recipe for success, in my opinion. We all have to make our bets. And I feel like I have found the money printer on strategy. 100 to 200 is a real nice sweet spot right now. I'm squeezing it a little bit because I rolled from 200 to 180 to grab some more premiums. If it shoots up, I'm willing to go from 100 to 110, 120. So I'm going to shrink the goalpost. I'm going to narrow the goalpost, and I'm going to try to squeeze some more premiums. That way I could eliminate some of the tail risk so I don't have to stay in the trade as long. And then I will look to roll again, widen the goalpost, bring some more premiums. I'm not going to get into this 21 day inside the 21 days because the tail risk is very, very serious, especially whenever it's a big trade. Other things that I've learned is buying power, just like deltas, is not static, right? Like the longer that you stay in a trade and you're dealing with the tail risk, the Vega, the Gamma, there's VAMA and stuff too. There's other secondary and tertiary Greeks that people don't talk about much. Your broker's not going to like that. Your broker's not going to like that. And I want to give a shout out to my father-in-law because he gave me the best analogy ever because he's a very, very prominent attorney in South Texas. And he said, it's like this, mijo. He calls me mijo. Nobody likes a court date. Nobody likes a court date. So look at your expiration date like a court date. Nobody likes a court date. Makes everybody skittish, everybody nervous. Even if you think you know what the outcome's going to be, you don't know for sure. So you got to look at your brokerage like the court that's hosting that court date, and they'd rather just it not happen, settle out of court. So treat it like 21 days to expiration is your court date, and then make the adjustments accordingly. That we always have 30, 40, 50, 100 days on the clock, and you don't ever get to that court date and just go collect that easier theta. There's easier premium on the contract. I always say, if you collected $1,000 in premiums, you're going to find more often than not that first 500 is a lot easier to capture than that second 500. So why don't you just go make a living with that first 500? Those are the things that I feel like the market has taught me over and over and over again. Anyway, I got to get rocking and rolling. I appreciate each and every one of you guys. TJ the Wheel Deal signing off. As always, may your skies stay blue, stock green. Peace out. God bless you guys.